right, so love your home. That's the theme we're talking. It's the month of love, of course. And tied in with loving your home, of course, is
maybe you want to get a new home.
Yeah, sure.
Maybe the home you're in or maybe you're renting isn't right. And what do you need to do to get into a new home in 2024?
And the first thing you need is?
I would say a pre-approval.
Drum roll, pre-approval.
Pre-approval
right?
is the way to go. It would shock you, even to this day, I receive offers from people that don't have a pre-approval. Mm-hmm. They've made an offer on a property, and the realtor's like, oh, we're just going to throw caution to the wind on this one. And, Clinton, they can get this done. 9 times out of 10 we can, but there's always, those ones that I really wish you would have that pre-approval up front. You would add more of an idea about what your situation looks like.
What goes into a pre-approval?
A pre-approval is really looking at your income, your assets, and your credit. And it also comes with a pre-qualification and oftentimes a rate hold. So you even know what rate you're going to get, what your payment's going to look like. So when you do make an offer, you can make an offer with confidence. If it is conventional, so if you're putting down 20% or more, oftentimes the rate holds are not just a rate hold. It is a real pre-approval that once you have a live deal, we know we're going to be approved. Mm-hmm. If you're putting down less than 20%, regardless of your pre-approval, the file still needs to go to the Canadian Mortgage and Housing Corporation, Sagen or Canada Guarantee, to get their approval as well. Obviously, they have their constraints. The one thing I will say is once you have a pre-approval, there are some don'ts you should not do. And I know everybody wants to know about don'ts. We're always focused on the negative here. Mm-hmm. But one thing you should not do, number one, don't go buy a new car.
Yep.
I always hear these people to be like, well, I have this car. I'm just going to trade it. My payment's going to be the same as the old one. Well, sometimes that doesn't work out to be the same. And getting a new credit account on your credit bureau sometimes can really bring your score down. And depending where your score sits, that could really negatively impact you. Mm-hmm. So how about just don't get any new credit? Don't even do any new credit inquiries. If anything, just make your payments. And if you have some debt, just continue to pay that debt down. That's always the recommendation.
What about furniture for a house?
No.
Appliances, that type of thing?
No.
Come on, you need appliances.
Many, many homes come with the appliances.
Yep.
And if the home doesn't come with the appliances, be in a position that you can pay cash for those appliances or negotiate those appliances into the purchase price and get whoever's selling you the house to make sure there's appliances in that home. That's always the way to go. And as you know, there's been a lot of delays in getting appliances lately, Todd. I don't know if you've tried to buy anything new, but unless you're buying it and it's in the showroom or it's in the warehouse, you're probably going to be waiting a while to get that appliance. So negotiate the appliances in.
Yeah. So that can actually impact a deal, can it? If somebody goes out and purchases a car, you've seen this happen.
I've seen this. And you know what? Yeah. The one thing I will say is not that many times the file gets reopened, the credit bureau gets repulled, but I'll tell you the times that it does. Mm-hmm. If there is a material change to your purchase, the purchase price changes, the closing date changes, there's a material change where the file needs to go back in underwriting. Sometimes if the credit bureau is too old, they pull a new credit bureau. Some lenders will pull a credit bureau before closing. And I have seen it that people have gone out and bought a Porsche before their mortgage closes.
Wow.
And suddenly your mortgage don't work no more.
Yeah.
So sorry.
So the pre-approval is good they'll guarantee that rate for how long?
A rate hold with most lenders is good for 120 days. So
right.
That's 4 months.
Right. So I've heard from some realtors. I've had a number of friends who are realtors, and they'll often ask people straight up, what do you pre-approve for before they start to waste their time to go out with people, right?
Smart realtors, that's the first thing they ask. And they often ask, not only do you have a pre-approval, who are you working with?
Yes.
Not all pre-approvals are the same. There's one of the big five that had a big advertising campaign last spring that said, you can get a pre-approval in 60 seconds. Mm-hmm. Do you think that's a pre-approval or do you think that's a pre-qualification? I think you're probably just qualified.
Yep.
No one's looked at your file. They've not reviewed your income documents. They've not looked at your credit bureau thoroughly. They've not looked at your assets. You know what? That's loose.
So you on a pre-approval will pull credit?
Well, we pull up credit 100%.
Yes.
I want to know exactly what's going on. I want to know what we're up against. And for me to get an actual pre-approval in place, for you to know that you have a pre-approval, we need to have that hard inquiry, because the bank's not just going to willy-nilly say, we're going to give you a mortgage without really knowing the full spectrum of this file.
So when you do a pre-approval, do you do that as an independent? Is that something you can shop to all lenders? Say,
Yeah.
this is our pre-approval
Yeah,
we've done on your behalf.
Yeah, so we have access to many different lenders that do pre-approvals. And the one thing I will say, Todd, is not all lenders do pre-approvals.
Mm-hmm.
And the rate on a pre-approval is not always as good as what we can get on a live purchase. So, be mindful of that. The rate on your pre-approval is likely going to be a little bit higher. And especially right now where we're in a declining rate environment, I'm, surprising people very pleasantly when they're making these offers to be like, guess what? You had a pre-approval at 6%. I can now get you a rate at 5%. So oftentimes I'm being the happiness coordinator.
Yeah.
But it's really important to have that pre-approval, because what happens if the rates go up? Or what happens if you make the offer and you're not, really pre-approved?
Yeah.
It can be devastating. It's an emotional transaction when you are buying a home. There's some emotional connection. I really think about it as business. I get to do this every single day, but people do have an emotional connection, and they love their home. And we want everyone that has a home, whether you own it, whether you're renting, whatever, to love the space that you're in and be happy and healthy and secure.
And just because somebody's pre-approved for $750,000 doesn't mean you have to go out and spend $750,000.
And the pre-approval is based on certain factors.
Right.
Oftentimes when we use a pre-approval, we'll use 1% of the purchase price for property taxes. But I've seen some strange ones where, we might have someone approved for $700,000, but then the property taxes are $10,000 a year and the numbers don't work anymore.
Yep.
So, pre-approval is really based on a qualification of the information we know at that time. It's a snapshot in time. And we always hope that there hasn't been any negative changes to the file, but people's situation do change.
Mm-hmm.
People lose jobs, they've changed jobs, they have to buy a car because they were in a car accident. Things do happen, and we try to mitigate these. And, a lot of these are not deal killers, but there are some things that people do that just don't help their situation.
Mm-hmm.
They miss payments. They buy cars just because they want that vehicle, and they take on additional debt just because. That's never a good situation. The one thing that people do that make, my job challenging is they don't have their documents together. And sometimes they're just moving money around for the sake of moving it. When we have to verify people's assets, oftentimes we have to verify it and get a 90-day history. But sometimes people have 13 accounts and they're moving all the money around all the time. And that really, almost shows the bank that you're trying to launder money. It doesn't make sense for you to move it from this bank to this bank, from this bank into a TFSA, from the TFSA back into a checking account at another bank, and just moving it around constantly. I think moving the money sometimes can be a real challenge, especially when there's multiple accounts at play here.
All right, so we've covered a lot of material, as we always have. Mortgage 101, your guide to home ownership. But what are some ways that people can get a hold of you, Clinton?
I think the first way and the most important way is check us out online at teamclinton.ca/radio. We have hundreds of blog posts. You can check us out on Google. We have the most 5-star reviews of any mortgage brokerage. And I always encourage people, go seek the advice of an unbiased mortgage professional. It's more important now than ever. If you've liked what you've heard and you want to learn more, feel free to visit us online at teamclinton.ca.